somewhat like inventory, then you might have to put them on the books like inventory, treating them basically like inventory using a flow assumption, such as, for example, with medical supplies. If you have drugs and stuff like that, then you have to make sure that you track them because people might try to break in there and steal them or something like that. So they're going to be important. That means you have to put them on the books as an asset, kind of like inventory, and then use a flow assumption in order to track them to make sure that you're properly managing the supplies. However, if you have small supplies, you're buying like staples, paper and whatnot, and you're not so worried about tracking the supplies, then the easy thing to do would be simply to expense them. Now, of course, if you expense them, it's more likely that employees steal the supplies and whatnot, right? So you probably have to keep an eye on them still, but that's the easy thing to do. Now, notice in theory that if the supplies are going to last more than a month or a year, for example, in theory, we should put it on the books as an asset and then depreciate or expense the supplies as we consume them. But that takes more work, right? That's going to be more tedious to do. So it really depends on the industry that we're in as to whether or not we're going to put the supplies on the books as an asset or an expense. One other thing to keep in mind with supplies, when you pay the vendor for supplies, that might be something like an office supply shop or something like that, in which case you have to watch out as to whether you're paying for supplies or inventory, or if you're paying for property, plant, and equipment. You might buy all those things from the same office supply shop. So that means that the dollar amount, you might put a dollar limit on, say, like your cash transactions that go through a bank feed and say, hey, look, if the dollar amount is less than like 1,000, let's say, I'm just going to expense it as supplies. But if it's over 1,000, I don't want you to automatically expense it as supplies. I want to at least look at it to see if I should be putting it on the books as an asset, property, plant, and equipment, or possibly similarly with inventory. You might have an issue with that. You have to figure out some way to want to automate your system, typically within like a QuickBooks with bank feeds, but distinguish between types of accounts that might be going to different places but have the same vendor. All right, just to keep that in mind, cash is going to go down, decrease the cash. Other side, we're just going to expense it. That's the easy thing to do. We're doing the easy thing. This time, office supplies, expense is going to go down. Well, the expense is going to go up, bringing net income down, and equity down, which will bring equity down. All right, let's put the zeros across the board. Zeros across the board, and our normal routine. It's important to have the routines, keeps you in the flow here. We know this process, put an underline here, an underline here, an underline here, just the normal routine. And then we will bring down the balance. Let's see if our transaction is in balance.